The new tax brackets are in. The new tax brackets are in. And I'm the one person who would actually pay attention to that and be excited about it because I have screws loose. But I want to tell you how it affects you and decisions you make with your money for 26. Source of frustration for me over the years since the Roth version of a 401k became so common, somewhere around 90% of employers offer you the option, if you one of the half of Americans have access to an employer-provided retirement plan, roughly 90% now offer you can sign up for the traditional 401k or the Roth version of the 401k. And then, of course, you have the option of the Roth IRA. I never mention traditional IRAs, do I? I always talk Roth, Roth, Roth. Why is that? Because tax rates in the United States are historically extremely low. And there's overwhelming advantage for all but the highest income earners in the United States, if you have a workplace retirement plan, to go all in the Roth version of the 401k or its equivalent. So there are rare circumstances that people will pose to me as questions that I'm not even going to get into now. There would be an exception to the rules I'm about to state. But with the new tax brackets, it's pretty clear. In fact, it's not pretty clear. It's crystal clear that you got to be earning big bucks before you ever tilt from Roth back to traditional 401k. And overwhelmingly, almost everybody's putting all their money into traditional 401ks. They're not doing the Roth version. Don't know why. But if you're earning as a single individual, you're earning under $200,000 a year, which is most people, or a married couple, you have income below $400,000 a year, except in the rarest of circumstances, you need to, without any gray mixed in, this is completely a yes or no, you want your money all in the Roth version of the retirement plan offered at work. Period. No money in the traditional 401k. Period. Again, income limits. You're a single individual. You make less than $200,000 a year. You are all Roth. Married couples, under $400,000 a year, all Roth. Why? Because the tax brackets are crazy low and likely lower than what they're going to be in retirement. But there's more. For people who are big-time savers, you live on substantially less than what you make, doing the Roth version effectively gets you saving approximately 30% more of your pay in the retirement plan that will never be taxed again when you do the Roth version versus the traditional. Even though the dollar amount limits are the same, effectively, because you're paying in with after-tax dollars, you're saving a much bigger chunk. You're living on much less of what you make and saving the rest to build financial security for yourself. And dare say, if you do this all through your working lifetime, you're able to retire when you want to, way ahead of the clock of when most people end up being able to retire. So what if you are making mega bucks? So in most cases, once you're hitting big money, which would be for an individual of more than, or really individual married couple, individual earning more than $500,000 a year, married couple $700,000 a year. In your case, doing the traditional still makes sense because you're in such a high tax bracket at that point. So to the 3 people listening or watching who are earning that kind of money, you want to be in the traditional. Everybody else pretty much is going to be in the Roth version if you're doing what's best for your finances long term. And again, there can be microscopic individual situations that what I'm saying would not be right. But in most cases, barring some extremely particular individual circumstances, those numbers hold.